Good morning. Welcome to the fourth in a series of Invest Atlanta Facebook Live events for startups and scale-ups in the city as it pertains to our COVID-19 pandemic. We are so glad to have you here with us this morning. Invest Atlanta is Atlanta's economic development agency, and we invest in the people, communities, and companies here. My name is Amy Love, and I'm on the economic development team at Invest Atlanta, focusing on startups and scale-ups in the technology space. And I'm excited to kick this fourth session off this morning. We would like to thank our partners who have been terrific in helping us produce these events, including the Technology Association of Georgia, the Advanced Technology Development Center, the Atlanta Tech Village, the Metro Atlanta Chamber, Women's Entrepreneurship Initiative, as well as the Silicon Valley Bank, Venture Atlanta, Georgia Alive, Atlanta CEO Council, Independent Community Bankers of America, Lab 1886, and Mailchimp, a fantastic crew that is helping us pull these together as inspiration, information, and hopefully dropping a little bit of positivity around the startup scale-up scene in Atlanta. So now let's get started with the founders and investors and managing partners of the newly launched Overline VC, Sean O'Brien and Michael Cohn. They will share the story with us this morning of why they launched the fund and their perspective on investing during this time of the COVID pandemic. And we welcome Melanie Touchstone of Mailchimp, who will moderate the Q&A portion. Sean has held various investment and executive positions throughout his career, including roles as an equity analyst, a hedge fund manager, and a corporate development leader, managing a global M&A strategy for a public company. Sean is a Techstars All-Star mentor and is an active mentor with Endeavor Atlanta, and is currently managing partner at Overline. Michael is a lifelong entrepreneur, seed stage investor, and startup ecosystem builder. In 2008, Michael co-founded Cloud Sherpas, the fast growth cloud advisory and technology services firm. In 2016, he was asked to establish and lead Techstars Atlanta in partnership with Cox Enterprises, and currently is managing partner at Overline. Sean and Michael, welcome and thank you for joining us live. We're so excited to hear from you. I'm turning it over to you now.
Excellent. Good morning, everybody. Thank you, Amy. Thank you to Invest Atlanta and all the sponsors for putting together this series and this great collection of resources for entrepreneurs and founders in our city. Just as Amy said, Sean and I are going to talk a little bit about why we established Overline, and then we'll talk a bit about investing in the midst of the COVID crisis. Sound good, Sean?
Perfect. Thanks, Michael.
All right, so we'll start off maybe with just a little bit of on our background. As Amy said, I'm a founder. I started a company called Cloud Sherpas back in 2008, and after we sold the business to Accenture, got involved with Techstars back in 2016. Big part of the role at Techstars was scouring our Southeast region, looking for great founders in all the emerging cities in the region. And we would recruit about, or rather invest in 10 companies a year. And another big part of the role was finding incredible operators in our city to support the founders as they came through the program. Techstars was a very mentor-driven program. And so I met Sean in early 2017. Now let me pass it over to you, Sean, to share a bit about your background, and then we'll talk about why we created Overline.
Yeah, perfect. Thanks. Yeah, my background's a lot different than Michael's. I came out more of a traditional finance track. I started as a retail stockbroker back in 1991, I think, with a Texas-based investment bank. I moved very quickly up to Nashville and joined a phenomenal, multi-regional investment bank called Equitable Securities. It had just a tremendous career there. We were ultimately acquired by SunTrust, and that was when I realized it was time for me to make a move. In 2000, I went on to the other side of the business, and I went to work as a portfolio manager for a hedge fund. A year later, I started my own hedge fund, and then in 2003, I moved here to Atlanta with my wife, who was 7 months pregnant with our twin girls. We relocated here, and I took a job with a small technology company. At the time, I had a lot of different roles there over my 15-year career, but my primary focus was on corporate strategy and M&A, and ultimately leading a global roll-up strategy, which ended with our sale of the business to a private equity firm in 2015. I started leaning into the startup scene here, which is how I met Michael. And when I was finished with my 3-year commitment to the private equity firm, Michael and I started conspiring about what is today Overline.
That's right. And we started conspiring on Overline because we kept seeing the same set of issues year after year on the demo day stage. And it wasn't just at the demo day stage, but it was really pervasive throughout our city, and we felt throughout the region, which was a lack of institutional seed stage capital that was ready to lead seed deals. Every year we'd get at least these 10 companies up on stage, and at least the first third of the class was investable each year. But they had a really hard time raising capital in the region. There were really a couple of options that founders that we found that founders had. Founders were either creating their own term sheets and shopping their term sheets to angel investors, or were leaving town to seek capital from outside the region. And so we saw this pattern repeating itself and decided that we wanted to be part of a solution. And so Sean and I spent the better part of last year working together as angel investors, and decided to put the fund together at the end of last year. And we were able to get to our first close about 2 weeks before the COVID crisis took hold here in the country. So our plan remains to raise a $25 million seed stage fund. To date, we have about 18 million committed to the fund. And our intent is to lead. We want to lead pre-seed and seed stage investments. And we aim to deploy anywhere from $1 to $1.5 million per company, either in a single funding event or stage financing event. Sean?
Yeah, so we see a lot of deal flow here coming throughout the Southeast region, which is our focus. I mean, ideally, we'd love to find enough high quality deals right here in Atlanta. But we do have a wider aperture. We're looking throughout the Southeast where we see similar trends in the funding ecosystem to what we see here. And Michael and I are fully committed to the success of the ecosystem here in Atlanta. There's so many of the raw ingredients that position Atlanta to be a top tier innovation hub, a top tier venture market. We've got an amazing, highly educated workforce. We've got a diverse workforce with different backgrounds and experiences. We've got a lot of undergraduates and graduate students coming out every year that would like to make a home here because we've got a great quality of life and a great cost of living, and we've got a great business environment here. And we've identified, while there are phenomenal resources and a great funding ecosystem that's already established here in Atlanta, we've really identified this one gap specifically for that first check into a business, whether it's at a concept stage with a founder or founders that are rolling out of a successful growth stage business and they've got an idea that they want to build a company around, or whether it's a traditional seed stage company that's got a team that's already established, an MVP product that's already released into the marketplace, some whiff of traction with either pilot customers or early paying customers. And they want not only a check to help them grow and scale the business, but they're looking for a partner to come in. And I think that's the big differentiation for what we're building at Overline. Michael and I are founder operators. While we have deep finance experience, we also have lived through the struggle of growing and scaling a business. We think that positions us with a different level of insight and, candidly, a different level of empathy for the founder journey, which a lot of startups value. We've also built an amazing group of partners to support our portfolio investments in our operating partner network. Michael, you want to talk a little bit about that?
Yeah, absolutely. We took a page here, perhaps from some of the experiences that Sean and I had at Techstars. At Techstars, we created a mentor community to support founders, and worked really well. But oftentimes, after the program ended, we saw some of those relationships fade. And so at Overline, we're building an operating partner network, similar in that we are out meeting with and working with some of the very best operators in the community. And a bit different in that we are aligning incentives. And so we're going to be very deliberate about the creation of working advisory boards in the portfolio. And so what that means is, every startup has some gaps. And if we find a startup that perhaps has a gap around engineering or a gap around product, we're going to find some of the very best operators in our network to plug into those startups. And when we talk about aligning incentives, we will be deliberate about the creation of those working advisory boards, not just an advisory board for the sake of a face on a slide, but an advisory board that will take accountability and some responsibility for helping the founders over a longer period of time.
Yeah, so some of the things that make us different than some of the other funding folks in the region. And before I even get there, let me just say that we want to collaborate with everyone, and we want to partner with everyone who's already established and supporting our great founders and our great startups in the region. But we want to lead. We want to commit deeply to the companies and their success that we're funding. We want to write big checks. We want to lean in with our own time and with the time and the support of our operating partners, whether it's giving insight or counsel on strategic decisions or day-to-day operational insights around product or around technology, around whatever it is that a founder is going to face. Ultimately, what we're trying to do is create, an unfair advantage for the companies that we're funding to help those founders through some of the struggles that are going to be inevitable as they're going out. Now, more germane to, I think, what we're here to talk about is almost everything has changed since we set out to begin the Overline journey. And certainly even since we had our first close on February 28th, everything has changed. And the fact of the matter is, nobody knows right now what it is that we're facing from an economic perspective and what the implications are going to be in the intermediate or long term for the startup community, because we candidly don't know how bad it's going to be or how long it's going to last. But despite all that, there are some things that we wanted to take a minute to share that we think are, some positives that are going to be available to startups and founders in our community and throughout kind of the greater entrepreneurship community throughout this crisis that maybe we'll spend a minute or two talking about. Michael, maybe I'll throw it to you and you can start.
Yeah, let's start with, Sean and I have been spending time with founders that are interested in funding founders that are that we've known, founders in our portfolio for a while. And everyone's looking for advice, what to do. And, one piece of maybe the first piece of advice is that in times of such uncertainty, nobody knows. And so this is really the only truth, is that there is no expert in this situation. We're all making our very best guesses, I suppose, as to how things are going to go. So I think if you're a founder and you're out there seeking advice from folks, that's an important thing to keep in mind, is that you've got to collect information and ultimately make some decisions on your own. But in these times, we think that one thing that matters most is getting to the other end of this, which is surviving both mentally, physically, and having your company survive this calamity.
Yeah, so let me just jump in there. Well, it's true that nobody knows, and the experts are doing their best to recognize patterns from past corrections, just like we are, and give advice. There are some fundamental truths about business and good business fundamentals, and one of the things that I love to see is that almost overnight, with this crisis, you've seen a refocusing on good, solid time kind of proven over and over business fundamentals around cash is king, around understanding your runway, understanding, things like the importance of high margins, and ultimately building a business that can run independently without an inexhaustible pool of outside capital coming in to fund it. Understanding things like, path to free cash flow conversion, understanding the value of focusing on your customers and focusing, doubling down your focus on the value that you're providing them in the times of crisis like this. I think those are some really good, solid business fundamentals that you don't need an expert to tell you. And ultimately, I think this focus that we're seeing, or refocus on the business fundamentals, is a really good and healthy thing that will ultimately create a more solid foundation on which we can build the next stage of startup growth.
Mm-hmm. Yeah, let's talk a little bit about customers here, Sean. For those startups and businesses that have customers, keeping your customers is really key right now. It's key to everything. You may have customers that are calling and asking for or looking to cancel. This is an opportunity to perhaps consider lowering lowering your price, extending your terms.
Maybe just summarize that. I think
yep.
What the important thing is, it's not as much about revenue right now as it is about maintaining your customers. There's a saying that is floating around everywhere that flat is the new growth, because maintaining a flat revenue line right now, it feels like a huge win. The key is retain your customers, work with your customers where it makes sense, because they're struggling like you are. Don't take on any sort of customer pain that's going to be a bad business decision ultimately. But we're seeing a lot of creativity throughout our portfolio and the founders that we're talking to about how to work with customers to extend payment terms where and as necessary, to extend renewal terms, to get creative on pricing and packaging, to recognize kind of the extraordinary environment. But I will say that while flat is the new growth for revenue, what we're really looking for and what we're seeing a lot of is founders that are not in any way looking for any sort of flatness in the rest of their business. They're really taking a more offensive posture during this downtime. They're doubling down on their customer values we talked about. They're looking for opportunities to upgrade their product. They're looking for opportunities to upgrade their talent pool with all the available talent pool, talent that's coming out of companies today. They're basically leveling up every part of their business where they can, so that on the back end of this, the reality is a lot of these companies that make it through, they're going to come out better competitively positioned because they've taken a minute to upgrade every part of their business. And candidly, they're going to come out with less competition on the other end, which, if they've taken care of their customers, if they've tightened their customer value, if they've improved their product offering, if they focused on delivering real value to customers, and help them throughout this, I think they're going to be really well positioned on the backside of this correction.
Absolutely.
Anything else to add there, Michael?
No, I don't think so. It's a great opportunity right now to be, well, yes, I suppose I do. It's a great opportunity to if you can, to be offensive, or rather to play offense. Don't be offensive, but to play offense. There's a lot of talent right now, unfortunately, that has just become made available. There's plenty of resources to find that talent. This is a phenomenal opportunity for digging out of some of that tech debt that you may have built up over time. If this is a great time to begin to automate some workflows that have been sitting on the back burner. or really to listen to your customers and understand what has changed in their business and how your products can change to add more value to them in this difficult time. It's also really important that companies take a fresh look at all of their marketing messaging. Marketing messaging that existed 60 days ago, is very likely out of date and perhaps worse, tone deaf at the moment. And so we're encouraging founders to wholesale look at all of their messaging, from website to email flows to ad copy across the board, and really try to nail the value proposition that your product offers as it relates to your customers' pain right now, in this moment in time. Another thing to consider from a marketing standpoint is that in some industries, the cost of customer acquisition right now is dropping. What used to be quite expensive, in buying Facebook ads or Google ads, for example, which was, a pretty critical element of a lot of direct-to-consumer businesses over the last number of years. The cost of a lot of these ads in certain sectors is dropping. And so if you are financed right now, this may be a great opportunity to, again, play offense and take advantage of some of these lower CACs.
Yeah, I think that's a really good point. And maybe just a couple closing thoughts. I think the mindset that we would kind of impart on any founder is to at the same time you're thinking about the effects that this crisis is having on your business, think about the effects that your business can have on this crisis. Get creative, focus on your value proposition. On the other end of this, there are tremendously deep pools of investment capital that are on the sidelines right now that are ready to fund once this environment has a little bit more certainty to it. We feel that, the spirit of entrepreneurship has never been more visible or more important in this community. A lot of the solutions to, sort of speaking globally for humanity, we're kind of in the middle or toward the end of the first chapter of this. We're learning how to survive through this first part of this crisis. The hard work is ahead of us, where we all have to figure out how to live with it, not to survive it. And we're seeing companies that are started every day or that are pivoting every day to point their companies at solving problems that weren't problems just a few months ago. And we think that that's going to be incredibly valuable. And so we celebrate those founders, and we celebrate all the founders that are working hard to keep or to revive the business momentum, that they had in the midst of all this. And so we're very much open for business at Overline. We have a fresh fund. It was good timing on our part, because unlike a lot of the venture funds that are out there that are really concerned about their existing portfolio investments, we're able to focus on net new. And so we're here to answer your guys' questions. And I see our friend Melanie Touchstone from Mailchimp has showed up. Hey, Melanie. And I think you're going to lead us through some Q&A. Is that right?
Yes, I am. Thank you guys so much. I'm Melanie. I'm with Mailchimp. First, I just want to thank you guys, Sean and Michael. You've done so much for the community. Overline is, you just said it, such great timing. We're proud at Mailchimp to be investors in the fund and be friends, especially if we've begun building our new initiatives around the startup community. So I just want to mention too, on a note of positivity, because I know things can feel kind of dark right now. Mailchimp was actually born out of the great .com bust years ago. And I know you, Michael and Sean, both have some stories and experience there. But it's always been our mission at Mailchimp to empower the underdog. So I'm going to mention a couple of things that might be helpful to some of you watching, things that Mailchimp's doing right now to support. First off, we've launched a $10 million price relief fund to support small business customers. So if you're suffering right now, I'll give you a link or drop it in the chat. to where you can learn a little bit more about that. We're also giving away free standard Mailchimp accounts for eligible public service organizations. And lastly, we know a lot of you are working to quickly pivot or get up and running online. So we are giving away free .coms for 5 years. So you can go to our website, Mailchimp.com. If you want to go directly there, it's Mailchimp.com/COVID-19.statement. And I'm sure all of you just have memorized that already. So again, I'll put it in the comments. But anyway, let's jump into a couple of questions. So Sean and Michael, obviously there's been a big virtual shift in the community, and it's making it much more difficult for a lot of companies to get in front of investors. We're losing some of those brain dates and just those moments in the hallway at events. Some are starting to claim that closing net new financing virtually isn't possible. What are your thoughts on?
Yeah, I'll say I really missed taking meetings at Atlanta Tech Village, and I will drink my Atlanta cup here, as I think about it. We've been spending some time with other GPs in the industry, and the entire capital stack is connected. But I think that you're going to see different elements of the capital stack responding a bit differently at this moment in time. I think it is certainly feasible for a seed-focused fund to meet a set of founders, to do their reference check and do their work remotely. It may not be the most comfortable, but I think it's entirely feasible. As you get a little bit further down that capital stack and you're looking at Series Bs, Series Cs, we think that there's going to be more of a challenge in raising a $20 to $50 million check with founders that you may never have met before, and having that happen entirely remotely. So as Sean said earlier, we're open for business. We're probably meeting anywhere from 4 to 5 founders a day and have been for the last few months, and fully anticipate getting into our next deal in all likelihood while we're still under a self-quarantine.
Yeah, I just add to that, virtual meetings are great. I spent 15 years of my career enabling virtual meetings at my last job. It's different. It is different. And I think another factor, Melanie, is just the suddenness with which we all shifted to this virtual environment. And it's causing everything to slow down. And so our pace and our diligence is going to be naturally slower as we get to know people. The reality is the founders that we're meeting with are still reacting to big changes. And some of them are more or less comfortable meeting virtually. It's difficult to pick up on the nonverbal cues a lot of times, even over Zoom, even over video, especially the team dynamics where you see the interactions. And the reality is in seed stage investing, which is where we invest, it's 85% people, because we know there's going to be a lot of pivots. There's going to be a lot of changes at the product level and business level. You're really betting on people. And so for us, it is a change. And then the last thing I'd say is nobody is on their A game right now. And maybe that's a little bit strong, but most people aren't. And so, part of the empathy that we're trying to show is understanding that everybody has got a lot of new stimulus coming at them. And I think it's going to just take some time for founders to get back on their game, to get their confidence, excuse me. And so I think it is absolutely possible. We're in diligence now in a couple of deals, and we anticipate funding at least one of them here in the next couple of weeks. But it's going to be slower and it's going to take more meetings. And I think people should just be prepared for that.
Great. We've got a couple of questions from the feed. How should small businesses leverage e-commerce platforms? I think that was part of an original question. Let me go back up. How will the current health economic crisis impact access to capital for scalable e-commerce companies?
You want to take that, Michael? Or you want me to?
Go for it, Sean.
I think, here's the reality is capital is seized up a little bit. It's still available. But just like we just talked about, the process is a little bit slower. And while there's massive amounts of capital that's waiting to be deployed because we're at the extended, tail end of an extended bull market, and lots of funds have raised a lot of capital, a lot of the portfolio managers we speak with are focusing on their existing portfolio companies because they're having to make they're doing triage. They're trying to figure out, who is not worth trying to save, who's okay that they can put aside, and who they need to actually intervene with now through a capital infusion quickly. I would say as a result, money is getting much more discriminating, and valuations have already taken, a hit. And in the seed stage and in Series A financings, we've already seen a 30 to 50% correction or revaluation. There's lots of reasons that we can get into why that happened and why we're seeing it in the earlier stage financings first, which has been consistent in past economic cycles. But clearly, e-commerce is positioned to be a big winner in all of this. Everybody's changing their buying habits. And I think that that's going to be not only a temporary phenomenon, but that's going to be one that's going to be with us for a while. And so when investors like us begin to look at new opportunities, the areas that we're looking at first are the ones that are either going to be net neutral or net beneficiaries to what we think the new norm is going to look like. And e-commerce is clearly going to be at the top of that stack.
The second part of that question was how should small businesses leverage e-commerce platforms to scale and grow local businesses in the current economic climate? It's a great question.
I think that whoever asked that question is probably better positioned to answer it. But we are big believers in digital transformation at every level of an enterprise. And the great news is that the companies that we're looking at that are at their infancy, they're digital native from the start. And so we're not, funding older traditional businesses that are in some pivot that are trying to adapt to the new environment and create a digital footprint. The companies that we're funding, they're already thinking through, how to have e-commerce and a frictionless acquisition experience for their customers before we even get to them. And so clearly, it's something that every company needs to have in their, whether it's from a true e-commerce perspective or a content marketing strategy where their prospective buyers can come in and get familiar with their value proposition and their unique differentiation before they engage a live salesperson.
I'm going to add just one thing to that. We are, as Sean said, focused on funding venture scale businesses. It's less about the local small business. But I will say, I'll just share a personal story. As we're all locked down, we've seen a lot of, or my family here has seen many small businesses pivot in a way that we see tech companies pivot. For instance, there is a local food distributor that since the beginning of time has been distributing food to restaurants, and in the midst of this crisis spun up a website, spun up an order system, and is now doing home deliveries. And so there is an opportunity here. This concept of digital transformation does apply to large enterprises and also applies to more traditional local small businesses.
Great point.
Yeah, it's a really great time to just be thinking about communication with your customers. And I know it's something from a Mailchimp standpoint that we are working around the clock to make sure that we can empower everybody to be able to maintain that line of communication, even with doors closed. So I'm going to jump into a question from Grant Wainscott. Are you looking at any creative industries, investments, digital media, OTT, VR?
Yeah, hey, thanks for your question, Grant. Glad to see you on here. We are looking, Overline is intentionally a generalist fund. And I'll be super candid, we want to see every opportunity in the Southeast. Anything here in our backyard, we want to get a look at. And as a generalist fund, we're not really trying to index to a particular market sector or economic sector. We're looking for great founders who have a real understanding of the problem that they're trying to solve, an authentic connection to that problem, and a clear, vision for how they're going to build a business around it. So good understanding and a good solid business model to support them. So we're looking across industries. Some of the industries we're avoiding are ones that are highly capital intensive or that have a really high regulatory burden, or just many years of burning capital until they have an opportunity to generate cash flow. And so we're naturally staying away from things like life sciences and biotech, manufacturing, hardware. We might look at a hardware enabled SaaS company, but we're looking for businesses that are scalable, that have great high margin profiles, differentiated technology, and great founder teams. But we'll look at any industry.
Awesome. Last question. If you guys had to name one thing that every early stage startup should be doing right now to help weather the storm, what would it be?
Yeah. I think I'm going to go with more than one thing on this one, but it starts with a plan, folks. You've got to have a plan, and you've got to execute that plan and be decisive. That is critical right here. Having hope is no strategy at all. But there's a couple of things that we would advise all startups to be looking at. One is just as we said earlier, talk to your customers. This is now an opportunity to begin to focus on product, whether it's items that you've had on the back burner, or whether it's an opportunity to upgrade your products to deliver more value to the problems that your customers are facing today in this new environment. Definitely spend time with your customers, spend time on product. Two, this is a great opportunity to work on team. As we said earlier, there are lots of companies that unfortunately are going through layoffs, which means that for the first time in many years, this is a really great talent market. And if you're funded, this is an opportunity to go out and get some talent that you may not have been able to get earlier. So it's an opportunity, again, to be not offensive, but to play offense. And lastly, we'd say from a strategy standpoint, really important to begin to model things out, model out what 18 to 24 to 36 months might look like under different scenarios. And look for opportunities to increase your enterprise value, along the way here. Sean, anything else to add?
I would just say, when you're building that plan that you just referenced there, that the plan should be, let me figure out the right way to say it. Build your plan based on self-sufficiency. There's a lot of stimulus and a lot of relief funding that's coming from the federal government. Everybody knows about the PPP and some of the challenges there. I think at the same time, question everything. Get down to the bare minimum from an expense perspective. Make sure that it's essential. Maximize your runway. Ideally, you want to have at least 18 months, but maybe 24 months or more of runway. So get creative with where you're spending your money and focus on the essentials, and try to ground your business model and your plan in a self-sufficient way, because you can't count on funding in this environment, and you certainly can't count on any of the programs that are being made available to lend a hand in your business.
That's great. I do see one last question, so I'm going to be selfish and ask it, and then turn it back over to Amy. From Colleen, she said, where can we access more information about the criteria for qualification?
Qualification for what? Sorry. For
it doesn't say. I suppose it might mean qualification for Overline investment. Is that perhaps we could? Yeah. The answer there is it depends. If that's the question, if you're looking for what are the criteria that we look for, the answer is unfortunately not going to be super satisfying. It depends, right? If we're looking at a direct to consumer business, revenue may not be the indicator. There may be other metrics that we're looking for. If we are evaluating an enterprise software business, again, there's going to be a unique set of criteria that we're looking for depending on the stage of the business. If it is at the seed stage, ready for that $1 million or $1.5 million check, you better believe that we're looking for some level of traction and some level of product fit. If it's earlier, it's going to be a different set of criteria. But as you heard Sean say earlier, what is universal for us at Overline is our concentration on founders and on the founding team. At whether we're talking pre-seed or seed, that for us is 80 to 90% of our decision is focused on the founders or the founder and the founding team.
And just tactically speaking, we have on our website a submission form. It's just a shortly typed form where you can drop in your pitch deck, and we respond to every submission, and we try to give thoughtful and complete feedback. And all I'd say is take your shot. Materials, make sure that you're being deliberate about spelling out your value proposition, and in particular, if it's a tech-based business, that you really focus in on the differentiation of your technology, your true customer value. We heard somebody say yesterday that productivity is so last year, and I wanted to shout amen when I heard that, because right now what buyers, especially if you're going to the enterprise space, they're looking for real true help and real true value. That means hard dollar cost ROIs, cost savings where you have it. And so make sure that your narrative in your deck, since that's going to be the first conveyance of your strategy, that it says it all. And we take, I would say, just from a math perspective, we look at everything. We give thoughtful feedback on everything. We end up taking medians about 1 in 5, and that's just where the math works. And so we hope that people will take us up on it, because we want to see every deal. So it's just on our website at overline.vc.
That's great, guys. Thank you so much, and thank you for having me. I'm going to switch it back over to Amy.
Thanks, Melanie.
Thank you, Sean, Michael, and Melanie. That was fantastic. You can tell from the fact that we've run a little bit over, and the fact that there's so many comments and still probably some remaining questions on the feed, that this is a really important topic, and people want to hear from you about it. So we do appreciate you spending this time with us this morning, and look forward to continued partnership. Thanks to all of you who joined us this morning. And again, thanks to our incredible partners. We will continue to host these, and you can be alerted by joining our email list at Invest Atlanta. We're also on social, and we try to post weekly when we're having hosting these sessions. So thanks again, and be safe, stay well.